What's happening, guys? Another Sunday scan coming at you. This time, right away, we've got a sale going on right now. And if you guys have any questions at all before joining, checking out the chat room, etc., reach out to Cam at investorsunderground.com. This time, we're giving away a lot of free stuff with the subscription. We reached out to a couple of our friends, and they ended up throwing in some pretty decent stuff. So not only do you get potentially the IU packages, but you also get Trade on the Fly DVD, which is Michelle's swing trading DVD. We've got an intro to options. We've never really hit the options side of things. So my buddy Sanglucci, who most of you guys know, especially if you went to the Traders for a Cause Project Impact last weekend, you saw him close that out pretty strong. He's a great guy. Great dude, and always has a lot of passion for what he does and a good way of educating. So he's throwing that in there, as well as Dash Trader. You're getting a month access to the simulator, which is always great, because I'd rather see you blow up a simulator account trying to get a feel for how to trade and understanding the markets, rather than obviously real money. So anyway, we've got a lot to talk about. We've got a lot of action in the markets. Last week was insane. About a month ago to date was my best week ever in 17 years of trading, and I did about 50 or 60% more than that last week. So that was awesome. Honestly, I don't even know what the numbers are as far. I have a general idea, obviously, because I kind of see my P&L at the end of the day, but I'm not counting right now. I'm just gonna ride this thing out as long as I can, and like I've always said, reset, refocus, get right back into it, and pretend it never happened. So I don't want to be upset, and I don't want to be too excited, but obviously this year is something special. So we have a super unique situation given the market volatility, and there was also a little bit of news. I had seen Cam was talking about it a little bit, but Phil Godecker had mentioned it as well. But Schwab opened 200,000 accounts last month. They opened over 600,000 accounts on the quarter, which means if they're about 10% of the industry, there's even if we were to lowball it and say 4 to 5 million accounts that are new over the last quarter, that's a lot of traders, and it explains a lot of things as to why things are running up, why the volume is so high on these small caps. Obviously, all those accounts are not all buying small caps, but I'm sure a good portion of them are because if you think about how we all came into the game, it's always you see this 20-cent stock, and in your eyes, it's 20 cents. What if it goes to 50, 60, 80? And you don't really have any understanding of share structure, market cap, or delusion, any of those things, right? So to you, it's like, well, hey, if I buy X amount of shares and this goes to $80, I'm rich. And we all came in that way. We all go through that same process, and then we kind of figure it out. So you've got millions and millions and millions of new traders per quarter coming into the market right now, and millions and millions and millions, out of work, trying to probably figure it out and dabble in. And so, like I said, it's a unique opportunity, and it's really up to you to take advantage of that right now. And on top of that, it's a very important time to make sure that what you're doing is working. And if it's not, then you need to figure it out. You need to adapt. You need to just stop, do a hard stop, and kind of reevaluate what you're doing in your trades, and what exactly you're running into for issues, and how you can combat that. Because like I've explained a million times, when you're firing on all cylinders, those gains can compound like crazy, and it's about firing on all cylinders. So you need to be able to avoid what's going to pull you back and take you off your A game, and you also need to avoid what's not working. And most of us don't really take the time to reflect on what's not working, because we're always pointing the fingers at other people. If you always look at people that lose, they're always blaming the broker, they're always blaming the newsletter. Sure, in some cases, newsletters are unethical and pump illiquid trash to their thousands and thousands of subscribers. Yes, I agree with them on that, but it's their own fault for kind of falling for the gimmick marketing. How to become a profitable trader in 30 days, how to turn $1 into $1 million, whatever the case may be. I mean, obviously, there's a lot of crap out there. But what you need to do is really reevaluate what's not working and just cut it out. And whatever is working, that's where you shine. Not everybody is a good shorter. I prefer shorting. I prefer big range, big volume. Not everybody's good at that. Other people are very, very good at getting long, holding long time, and letting trades work. I'm okay at it, but I'm not great. So I'd rather put my attention and my strengths to work in this market. So I'm going to be focusing on different things than somebody else. So that's really what it's about in this market right now. It's a great time to shine. It's a great time to really build your accounts, like I've said numerous times. And again, if you're not doing that, then let's figure it out. And each day in the Traders Lounge, so we've got the Momentum Room, we've got the Traders Lounge. Traders Lounge is where we do the kind of mentoring and whatnot. Last week, 3 times around 2 p.m. or so, just once I was kind of settled down on trades and just kind of babysitting a few positions that I had that were in the money, but just kind of watching. Just grabbed the mic and started answering questions. So we did that for a couple hours, last week, and we got we got through to a lot of people. So happy to do it anytime that I'm not, buzzing around with my head cut off. But other than that, I mean, we've got a lot of stuff on watch. We had a lot of textbook setups, gap up, parabolics, everything right off the gate on Friday, which ended the week really, really well. So, couple notes that I put on Scan. No need to find tops and bottoms in this market. No need to be a market caller. One of the most popular questions I get on DMs, PMs, Twitter, etc., is what's your thought process on the market? What are you thinking the market's going to do over the next month? What are you thinking about over the next year? None of that matters. None of that matters. How is that going to help you today? It's not. If you're a trader, how is that going to help you today? So really what you need to focus on is what is your opportunity within this current market environment. What is the opportunity tomorrow? What is the opportunity Tuesday? And take it day by day if that's the type of trader you are. If you are looking for a macro view 6 months, 12 months out, then get out of the day trading space. Get out of the short-term thinking and just do that. But don't try to mix the two and really focus in on what's going to better yourself as a trader. Other than that, for notes, the biggest thing I did all week was just move on, right, from tickers that weren't working. I like to dabble in. I like to start in. I don't scale into a loser. So when I'm wrong, there are minimal losses. When I'm right, I'm scaling into the trade. I'm scaling into the winner. Patiently and with a game plan in mind. You can't just add. You still have to have a plan. Sometimes the easiest way I explain it is pretend you're not in the trade. And so if you've started into a trade, you have a position, you're on the right side, when do you add? Pretend you're not in the trade at all. And then think about, if this was my first entry, where would I be entering? Because a lot of times when we have some huge P&L swings, or we're on the right side, we just start firing in ads, and then you ruin your average. It pops up a little bit and you're emotionally involved. So I want to always be emotionally disconnected from every single trade that I make. Patience has been working fantastic, but be aware when things start to go sideways or they start to grind up if you're short, or the same thing if you're long, if they start to go sideways and start to fade off. You can always size down your position and literally get right back in. It's better to be safe than wish you were safe. It's better to go ahead and just size it down. If it rebounds, you can always add back. Or if it stays heavy and you were short and you were thinking, it could go either way, you can always add that right back in. But it's better, especially in a market where things are fading off and then they jump right back up on minimal volume. So it's better to be safe. You can always add back in. And I think last but not least, the last note that I had was, like we talked about at Traders for a Cause, Project Impact, max dollar stop. Don't take yourself off your A game. Don't give back weeks or months. Give back a day or two max. Don't lose ground in this market. You need to stay hot. You need to stay being able to be, aggressive in a good manner. But, you need to stay there in this market because, like I said, profits, P&L compound like crazy. So I think it's very, very important. And let's get into the main watches. So SGRY. SGRY was a pretty nice trade throughout the day on Friday. Nice steady move. It came up relatively quickly. From 720s to 820s all the way up to about 920s or so. Had a little bit of push outs throughout the day, came back under VWAP, did a good trap, reclaimed. You can see that it held over VWAP for the rest of the day. Nice squeeze out after hours. I'm expecting a gap up based off of the after hours action, but we'll see. I think that shorts kind of got in the way on this one. And I think that we could potentially have another 20-30% type of blow off move. And then maybe a fade off from there. So I don't mind joining the trend if it sets up, if I have a good risk to reward ratio. Otherwise, I will just let it blow off, let shorts do the work, and then I will look for the fade after that. That's very, very important. We talked about it on mRNA and a few others, but mRNA, this was a reactive trade. So I reacted out of the open. We had a nice pre-market kind of top here. So the goal is basically looking left. I want to be able to react into any push, such as what happened off the open. So as you saw, I let it kind of blow off and then got short. I posted those on Instagram, Twitter on Friday. Ended up unwinding, and so in the room, I had said that the main level is 45.50. And I will not size unless 45.50 breaks down. You have to assume that shorts are bent. This daily is huge. Shorts have not been let out of this thing. And you can see nice breakout over that 36 level. But total squeeze mode right now. We're going to get a great trade. We're going to get a great unwind. It's just a matter of time and not pre-exhausting yourself. So the point here, as I told the room, I dabbled a little bit just to kind of test it out, but let the shorts do all the work. Let them squeeze themselves out. Everybody kind of, add. Then they're emotionally involved. It goes just a little bit more, squeezes everybody out, and then gives a great unwind. So I got a good piece of this on Friday, both in this account as well as E-Trade. And then as I was talking about a little bit earlier, you can see how it kind of rallies back on relatively low volume. So you always want to be paying yourself into weakness, and if it stays heavy, you can always re-add. But you should always assume it's going to snap back. And usually when I trade off the open, I'm always assuming it's going to snap right back. If you size based off assuming it's going to snap back, you won't be emotionally involved, right? A lot of times we kind of scale, we add, because we're right, and then it snaps back and goes back the other way, and you're freaking out, and you end up turning a pretty good win into a loser because you didn't price in the fact that it's likely going to snap back. So typically what I do is I look for where the last level it was that it kind of had a little bit of resistance and plan my size based off of that. And then that way it just gives me that buffer to not be emotionally connected with it and be able to let the trade work. So for me on Monday, 46, 47s, ideally gaps up and potential unwind under the 45.50 level. Don't try to force this trade. It's going to take time. It's going to take time to exhaust everybody out from both sides. There's going to be a rotation of longs getting out to, short covers. And at some point, once the tide turns, we're going to have a great trade. So this is my top watch for sure. It was a fantastic trade on Friday. It's been great all week, but shorts are definitely stuck. So, don't underestimate that. GILD was another one. This actually came back in a big way, like really big, and did not anticipate this much of a rally at all. I basically reacted off the open and got a nice piece of it, and I think it was right over here. I posted my chart as well. But the fact that it came back so big off the lows, I mean, it looked like trash, and then all of a sudden it's right back up to, pretty much where it was at the open. So in my opinion, that's squeezed a lot of intraday shorts out. So if we open relatively flat, then I'd be looking to actually fade it based off of these levels over here. So 84.50, to me, that's probably 85 buffer over and under. But I'm thinking that, I want to be able to react to either a big gap up and shove, think that it'll fade off, or, if it's under 83, starts to get heavy, then I'd probably fade it. But I don't want to anticipate what way it's going to go. If it's just kind of going along the way, sideways at VWAP, I don't want to get into a situation where I'm sizing in, betting which way it's going to go. Because that means your risk is elevated because you don't really have an exact edge. But in my opinion, based on how this closed, it squeezed out a lot of the shorts on Friday, which means that there's probably less shorts to cover on Monday. And so with that said, higher the better. Watch this level, 84.50. Watch this level, 83.80s essentially. And then VWAP. Those are my three levels. That's where I would probably scale into the trade as each level failed. Shop is not a typical go-to type of setup, just like Tesla, but there are probably 4 days a year that I get excited about it. And this is one of those times. Just like, Tesla the other day when we had that big gap up and fade, you should assume that Tesla's going to keep on going and going and going and probably be a pain in the ass on the short side. Because as soon as you get excited about the unwind about to happen, the invisible hand comes in and shoves it up. So anyway, with Shop, I think you can probably see why I'm interested. Looking at the daily, you can see we're coming right into some chart resistance. So, if we were to gap up a little bit on the market in general, I would assume we're going to be, well into the 600s on Shop. But we might have some overhang here. So this day was earnings day. It had about 10 million shares. Friday, it traded about 6. So most of the time, this thing only trades about 3 to 4 million shares on the high days, 2 to 3 on the low days, right? So that level, that 600 level, is going to be a very big level on the daily. Ideally, gaps up 610, 620, has some type of parabolic, and then pulls back 580s. You're going to need market support on this thing. But this is starting to kind of be an outlier compared to some of the other ones. There's a few that you could probably associate this with. You got CMG, you've got Shop, you've got W, where you've got these outperformers compared to the rest that are kind of doing similar bounces, but just not on this scale. So Shop is obviously an outlier. And with that, we've got gap. So 450 to 480s, 490s to 505s, whatever, over 500. Then Friday was 520s to about 530s, 540s for the next gap. So we're getting into parabolic range. Gap. Shorts are obviously bent. I'm not trying to find a top on this thing. The only thing I would do is let it rip shorts in half. And as it kind of blows them out, I'd look to start to dabble in on the pops versus that high. Otherwise, just wait. Wait to see where it's kind of consolidating on the way up. where that level is. So let's just say it's consolidating at 610 all day. And then it ramps up 615, 617, fades off 616, 615. I'm not interested until that 610 level starts to peak out. And at which point, then I would risk towards the recent highs. So that's how I would trade that one. Very rare that I'm trading a name that big, but when the trade sets up an A+ opportunity, I'll trade it. TRNX. So this is under the failed follow through section of Scan. So you can't ignore the fact that this thing had 600 million shares. I mean, almost 60% of a billion traded. So there's a huge market here. There's a lot of future bag holders buying this thing. You can see the resistance at VWAP. So the table is turned. I think it's pretty obvious that 33 is your key level, right? So any flush under 33, I think is going to get absorbed right back up. The only way that we're going to have a crack under 33 that holds, in my opinion, is if we start to push back up towards 38, 40. Ideally, it ramps through 40 for the entry, starts to get heavy at 38, and then starts to unwind from there. And I think if that's the case, then we go back to 22, 25 tomorrow. But again, we've traded over 1 billion shares in the last 2 days. So there is a huge market here, but it doesn't matter. And on that note, if we're holding on 38 and 40s and it looks good and there's a good consolidation pattern, then I'm not looking to fight it. I'm looking to react to the big move. I didn't try to find the top on this thing on Friday. I just waited for it to exhaust all the shorts out and kind of go to peak stupidity. But the reality was that there was no pullback, no panic for longs to get out. And therefore, when and if it did pull back, it was going to be, nasty. And that's exactly what we got on Friday. So anytime something goes straight up, the higher it goes, the nastier that pullback is going to be. It's healthy for stocks to pull back along the way. That way you don't have everybody making, in this case, 400, 500%. So let's see what happens with that. The last two in this section are, lower volume, THMO and URO. These are ones that I like to just kind of have on the back radar, set some price alerts, and if they ramp and start to fail to follow through, then I will lean on them and just kind of hopefully make some money on the side of my main trades. So again, THMO, similar trade. I covered that towards the close on Friday. Other than that, continuation ideas, DNJR. This one's had a decent run up off the lows. It's been a pretty nice move. I had it overnight on Thursday night to Friday. I liked the wicks. We talk about the wicks getting bought up, so it felt to me like shorts were in a little bit of a bind. So I got there, but I didn't take it off. I mean, I could have. Newsletter came in. They pretty much marked the top as usual. But I'm going to be looking if it starts to base, at this level and start to form a 250 base, 280 base, then we might have a nice squeeze out. If not, and 250s and this VWAP level fail, then I'll be moving on, taking the profit and running. BCRX, I keep on watching it and I keep on missing it. The first day that I had a bunch of volume, I watched it and it faded off. The next day it came back and I was like, oh, this might have been a nice bottoming action. Might be a nice reversal setup. And I totally missed it. So I do like this breakout. You can see how clean this VWAP reclaim is. So I'm going to be looking for a big picture. Trend join potential off week opens. Otherwise, higher the better. And just set some price alerts. And I'll be looking for the backside trade eventually. NVTA. Going to keep an eye on. The daily chart I like. The intraday I do not. But what my thought is we might get a nice breakout. So from about 15 to 1650s or so, maybe a little bit more. And then I feel like it might just snap right back to where it came from. Slam right back down. So I'm kind of looking for that ramp up, squeeze everybody out, and then fade right back. So that's kind of my thought. But again, it's not a main watch. I just want to be familiar with it. Saw it on scan. Felt like it had potential. Bounce watch, AKER, definitely still watching. A little bit of bottoming action on Friday. You can see here, 330s. That was the first day since I've been watching it that there was some support that kind of came in and consolidated. This one is a great example of I got a lot of questions about it because the idea on scan last week was if 650, 7 triggered, then potential squeeze, potential breakout, because we were into a situation where we had almost 100 million shares traded and it was consolidating. It hadn't cracked yet. Next day it cracked, but I had a lot of PMs and DMs like, hey, do you still think this could be a breakout? And it's always the same kind of questions on these types of situations, because people just see an opportunity, and instead of having a plan or respecting the plan, they kind of jump in, ask questions later. So again, yeah, if 6 and 650 and 7 triggered, I think that there was a lot of potential, but instead it just kind of completely unwound. We saw this on HEPA a while back, and I'll show you that one right over here. So HEPA had the huge volume, and then it kind of rebounded, it failed, and it just kind of faded off. And then they had a huge volume day again, and then we got the real move. So that's why I'm still interested in this. That's why I'm staying familiar with it, just because it traded so much volume so high, and then it just did nothing. So I am watching it. I have triggers set. I need a PR though. I need something, for a reason for it to bounce. But again, be cautious if you're taking trade ideas. Make sure that you're taking a trade idea, not kind of making your own. And then, if I like it as a long 657, that doesn't mean it's a buy at all. So just make sure that you have a trade thesis behind your idea, rather than just, taking a trade and then asking the questions later. So definitely still a watch for me. Staying familiar with it as always. Other than that, I just threw a bunch of trades together that I like. I'm just going to rapid fire through them. I want to stay familiar. Whoops, can't type today. NVAX, I want to stay familiar with this chart. Doesn't mean I want to trade it tomorrow or Tuesday, but there's going to be a big trade here. So typically I like to set price alerts when it breaks out of certain consolidation patterns. SPCE and Uber have been fantastic every single day. But again, you got to take advantage of the move. So when the market gets heavy, when the market breaks out, these have been great go-tos. SPCE, Uber, and BAC as well. And you look for relative weakness, relative strength, and as long as you're taking the trade, it's okay, because you can see you're stuck in this channel right here. So until we break out of this channel, I would assume that we're just going to be stuck. I also think that if we were to break out to the outside, upside, we'd probably come right back in and slam back down. So it's important not to be trying to find the top when it does break out. But when it does pull back, I think we'll have some good, good fades as well. So SBC, Uber, and BAC are all great go-tos for me when the market's volatile. CLVS, I've been watching. You'll start to see a lot of similar setups here. Great setup here, but if you look in, you got a nice ABCD multiple time frame breakout. For those of you guys that have watched textbook trading and tandem trader, you know what a multiple time frame breakout is. So you've got not only the daily chart, but you've got the intraday kind of setting up at the same break point. And that's what Friday was. So hopefully we've got some nice breakouts over here. And they might actually have a catalyst coming. I've got to double check that tomorrow before I make any trades on it. But definitely nice opportunities in the horizon. So, or on the horizon. So let's keep it on watch. Love, nothing I'm crazy excited about, but good volume. And a lot of times these will pop back up to say this 11 range, 12 range. And to give you an example, SDC, right? So you've got this nice breakdown, kind of slow volume, then it ramps up, slams back down. That's what I'm looking for on love. And that's why I will set price alerts, because when this thing starts to pull back, it's going to be a nice $2 per share. So that's what I want to take advantage of. So that's my game plans for tomorrow. Again, my only main watches are the top ones that I talked about. So SGRY, mRNA, GILD, and SHOP. Those are the 4 main watches. Maybe in the morning tomorrow, only 2 of those are going to be my main watches. And then I'm going to have 2 new ones, because we've got PRs every single day. As you guys know, 6:30 a.m., 7 a.m., you've already got 3 200% runners, right? So, my game plan, my thought process is, get to the desk early, get a feel for what's gapping up, locate stocks that you need to locate. I typically take the chance of just wasting money on locates rather than paying top dollar later on. And gets you a good feel to kind of see what's available, what the float is. It gets you one step ahead. So the earlier you get to your desk, the better you can prepare. The earlier you can get a feel for the market. Personally, I need to get a feel for the market, especially if you take a day off. You fall way back. You fall way behind. So you always need to kind of refresh what happened today. When it broke out to this level, how did it react? You got to get in there and make sure you're reviewing charts every single day to really have that edge. But other than that, I don't care if the market goes up or down. We have so many trades every single day. You have to find out what you're good at. And, I'm helping a lot of the traders in the Traders Lounge figure that out. You can do that by reviewing your trades. You can do that by just sometimes saying things out loud. I like doing Sunday scans because it actually helps me as a trader, literally. I remember saying things, talking to this camera, and when it comes time to it, I'm either going to stop out or stay, or I was waiting for this breakout, whatever. I remember the kind of lessons or the things that I preach, and you got to practice what you preach. And like I said, if you have trouble with stops, there's ways to take care of that. You can put an automatic stop on your account so that you don't waste weeks and months and years. So figure that out, and you'll become a much better and consistent trader. Figure out what your flaws are, and figure out how to stop them. And really, it's just about getting on the right side of the trade right now. So that's about it for me. Again, Cam, C-A-M, at investorsunderground.com. If you have any questions about, Investors Underground, like I said, we're doing a sale right now. So if you are looking, if you've been kind of circling, if you've been watching Sunday scans, I'm assuming you've got a lot out of this. And if this is exactly what we do every single day. Pre-market, I do a morning call every single day, which is very similar to scan. I go over my top 3, 4, 5 watches, what I want to do on them, what I'm looking for, how I would react, and that's at 8:50 a.m. to 9 a.m. every single morning, just to get you guys prepared for the day. And that's it. So again, as always, leave a comment, your biggest takeaway from scan. Or anything else for that matter. If you've got video ideas, I'm going to try to get a couple videos out this week on YouTube. Last week was one of those weeks that I traded a lot, and it was nice to get away from the desk at 4 p.m. But Ben Clark, you are this week's winner. So reach out to me, webmaster at investorsunderground.com. Somebody did leave a comment. I can have USPS pick up at my door, so I'll be getting all those out. And like I said, I know I've been a little while for some of these shipments, so I'll be adding in extra shirts and extra stuff, just because obviously it took a while. But like I said in the last video, I'm not going to any USPS store if I don't need to. So that's it from me, and I hope you guys have a wonderful weekend, or rest of the weekend, and we'll catch you guys in the room tomorrow.